Hey everyone, welcome back to another exclusive podcast from IronFX, where we're dedicated to bringing you the absolute best education to help you take your trading to the next level. I'm your host, Desmond, and today we unpack the dramatic recent events in the Middle East and their ripple effects on global oil markets. I'm your host, and for the next few minutes, we'll explore how the intensifying conflict between Israel and Iran, coupled with the United States' direct involvement, has sent shockwaves through energy markets and heightened inflation fears worldwide. The past month has seen a sharp escalation in hostilities between Israel and Iran. What began as a series of Israeli airstrikes targeting Iranian military and nuclear sites quickly drew in the United States. President Donald Trump's public deliberations, first threatening, then hesitating, and finally authorizing military action, kept both global leaders and financial markets on edge. On a Friday evening, as Trump mingled at his New Jersey golf club, US B-2 stealth bombers were already en route to strike three of Iran's most fortified nuclear facilities: Fordo, Natanz, and Isfahan. The operation, dubbed Midnight Hammer, was described by the White House as a tremendous military success, with Trump announcing that the strikes had eliminated Fordo, a key nuclear site. The immediate market reaction was swift and severe. Oil prices spiked more than 7% following Israel's initial strikes on Iran, reaching their highest levels in months. The prospect of direct US military involvement added fuel to the fire, with investors bracing for further escalation and potential supply disruptions. Brent crude, the global oil benchmark, surged to nearly $79 per barrel, while US crude followed closely behind. Analysts warn that if the conflict deepened, especially if Iran retaliated by closing the Strait of Hormuz, a choke point for nearly 20% of the world's oil shipments, prices could soar to $130 per barrel, a level not seen since the early 2010s. As the situation evolved, oil prices experienced wild swings. After Trump delayed a decision on further military action, Brent crude retreated but remained elevated, hovering around $76 to $77 per barrel. This persistent price pressure has kept inflation risks front and center for policymakers and investors alike. Economists warn that a sustained surge in oil prices could push US inflation close to 6% by year-end, eliminating any hope for interest rate cuts and squeezing consumer spending. The last time markets saw such volatility was during the 2022 Ukraine crisis, but analysts caution that the current Middle East standoff could have even broader consequences given the region's central role in global energy supply. Beyond the immediate market turmoil, the strategic stakes are enormous. Iran's parliament has already threatened to close the Strait of Hormuz, and both Israeli and Iranian forces continue to exchange missile strikes, targeting critical infrastructure and raising the risk of a broader regional war. For now, the world is left watching and waiting. Will diplomatic efforts prevail, or are we on the brink of a wider conflict that could send oil prices and inflation soaring even higher? One thing is clear: the Middle East remains the world's geopolitical and energy powder keg, and what happens next will shape global markets for months, if not years, to come. That's all for today's episode. Thanks for tuning in, and in the meantime, do remember to subscribe to our podcast here at IronFX, where we're dedicated to bringing you the very best education to take your trading to the next level. Until then, stay informed and stay tuned.